Futures posted solid gains ahead of Monday's open as investors kept a close eye on trade developments. At around 5:50 a.m. Eastern Time, Dow futures rose 79 points, indicating a positive open of 104.46 points. Futures on the S&P 500 and Nasdaq also indicated an upbeat start to their respective sessions. With little economic data due out today, investors are likely to still be digesting last Friday's jobs numbers, which saw the economy add 201,000 jobs in the last month, a figure that beat market expectations and put investors on edge over where the U.S. Central Bank could be heading next. Elsewhere, this week marks the 10-year anniversary of when Lehman Brothers filed for bankruptcy September 15, 2008, which became one of the largest victims in what is seen today as the financial crisis of 2008. And in Asia, markets were mixed today as trade tensions between the U.S. and China remained in focus. Both the Nikkei 225 and South Korea's Kospi extended their earlier gains to close higher. The Nikkei 225 ended the day up by 0.3% at 22,373 points, while the Kospi saw gains of 0.31%, with industry heavyweight Samsung Electronics rising 1.34%. In Australia, the ASX 200 recovered from its earlier losses to end the trading day largely flat. The Greater China markets, however, suffered losses, with Hong Kong's Hang Seng Index down 1.62%. Over on the mainland, the Shanghai Composite closed lower by 1.21%, while the Shenzhen Composite fell 1.84%. And back here in Africa, following the announcement of further contractions in the South African GDP data in the second quarter, the rand crashed to below its level before President Cyril Ramaphosa took power, opening this Monday at 15.27 cents to the US dollar. There's also a prospect of a downgrade by ratings agencies that will make state borrowing more expensive for the country. Our business correspondent, Nobukle Koma, spoke with a wealth coach and a former analyst at Investec, Samke Nlongo, on the ramifications on the South African economy following the data.
Last week, GDP data was released and it revealed that South Africa was indeed in the technical recession. We know that those numbers in the second quarter dropped by 0.7%. And in the first quarter, it was said that it was 2.3 and revised to actually 2.6. How is this going to affect the South African economy?
Basically, I think it's reflective of what's actually happening in our economy, especially around our policies. So the biggest decline in our economy is actually the agricultural sector, which was down 29% in the last quarter and about 26% in the first quarter. And a lot of people are saying that this is around the land reform policy and around expropriation without compensation. So there isn't capital expenditure and investment into land and to the agricultural sector, which is why you're seeing that big contraction. In terms of what's going to happen, you would expect for your food inflation to start ticking up, which in fact has gone down since the drought of 2015-2016, which spiked our prices in 2016-2017, but now we've seen those come down again. So I think you would expect to see more than anything else a spike up in food price inflation because of the continuing decline in our agricultural sector.
But then there's been talks about Moody's likely to downgrade us because of the latest data. Your views on that?
So Moody's did issue a statement after our GDP numbers to say that, they revised our growth forecast actually into half of what they had forecasted for 2018, and that this is a credit negative, i.e. it will lead us more towards the downgrade side than us being held stable. So if that does happen, we'll definitely be kicked off the Citibank World Bond Index, which we still are on simply because that index looks at the Standard & Poor's and Moody's ratings and not Standard & Poor's and Fitch, by which we are already graded junk status. So it would have a very big knock-on effect if we are indeed downgraded by Moody's. Analysts and market commentators are saying that the JSE being down about 4% overall after the news of the GDP, and the rand being at 14, 50, 15 levels over the past month, down from 11.50 at the peak of Ramaphosa. They're saying that that is probably because the market has already priced in the Moody's downgrade as well. So So the knock-on effect would then be as a result of our local bonds being off-sold by those asset managers and portfolio managers that cannot, in terms of their mandate, hold any assets that are in an economy that is rated junk status.
But it wasn't just agriculture. We know that there was trade. We know that there were other industries. What does this mean as well?
I think you're seeing a general contraction overall. But, it was trade, transportation. It was obviously as a result of the increase in the fuel price, where South Africa is having record fuel prices at the moment. And that is, again, a function of, I guess, the global tensions that are happening and the global selling off of emerging market assets, where Turkey, Argentina, Brazil, Russia, South Africa are feeling the effects. So one of the market commentators and analysts said that instead of BRICS, we should actually be looking at the new acronym, which is BRACS, Brazil, Russia, Argentina, Turkey, and South Africa, and what those countries are going through, because that is more reflective of a commonality in those countries, as opposed to what's happening in China and India, where they've got surpluses, they've got, stronger currencies than the South African rand. So that is something quite concerning.
Just speak to us about how the global crisis at the moment between the US wanting to impose tariffs on China is going to affect the South African economy.
Yes, so obviously that leads to a global slowdown of trade, and it has led to a global slowdown of trade. And also, when countries have protectionist stances, it raises prices and obviously makes it quite unaffordable for global trade. And China is our biggest trading country, even though the EU is our biggest trading bloc. China as a country is our biggest trading partner, so obviously if there's a slowdown in trade happening there, or they have higher input costs, that could affect how much they are buying from us, or they could be demanding our goods at lower prices, which does affect obviously our trading deficit as well.
And after the break, we cross over to the Nigerian equities market for updates. Do stay with us.